Now, online financial content creators have become hugely popular in India amid the rise of social media and easier access to the internet. But the rapid rise of these finfluencers, as they're known, coupled with a lack of regulation, has created opportunities for scams and exploitation. India's market regulator has announced new registration rules in an attempt to clamp down on rogue players in a sector in which many people are building legitimate careers. Rebecca Bundhun with more.
There are 6 financial rules that you need to know as a...
Ashna Tolkar started posting Instagram videos on personal finance 3 years ago at the age of just 19 while studying for a finance degree. She wanted to share her views on how to save and manage money.
It is a necessity that everyone needs to know, like be it Gen Z, millennial, baby boomer, every person should be aware about their money, their finances, everything.
Fast forward to today, and Tolkar has 115,000 followers, mainly among young urbanites aged 18 to 35. Her videos are simple and fast-paced.
Chocolate.
Anything to eat.
What started out as a fun side gig has since become a fairly lucrative full-time job, with brand deals and online courses. Tolkar declined to disclose her earnings, only to say an established influencer in India can make between $1,200 and $6,000 a month. Financial influencers are a fast-growing segment among the 3.5 million content creators in the country. Their dramatic rise coincided with a boom in the stock market, the ease of online trading, and the COVID-19 pandemic. These attracted millions of ordinary Indians eager to invest. And in a country with a relatively low financial literacy rate of 27%, many new investors went online in search of advice. But a lack of regulation has led to some unscrupulous behaviour, such as charging subscription fees for which users get little or nothing in return, or so-called pump and dump schemes, where investors are urged to buy a particular stock so that its value is artificially inflated, and the individual behind the scheme then sells those shares at a profit to themselves.
It's a rapidly evolving space, with no entry barriers, and therefore it's very easy for anyone to come in, not be authenticated, and dispense advice, which people seem to feel is authenticated in some way, and therefore there's a lot of potential for mis-selling, for pump and dump schemes, and therefore the regulation of this space is required. But at the same time, it's very difficult. It's very difficult to swat these flies because they just come out, a dime a dozen.
India's market regulator, the Securities and Exchange Board of India, or SEBI, has been taking steps against potentially harmful content, in line with countries like the UK and Singapore, which have long imposed rules on financial influencers. In recent years, SEBI has barred and fined a few individuals who gave questionable investment advice and who are not licensed as investment advisors. And in July, SEBI said it had identified almost 9,000 instances of misleading or unlawful social media content related to markets, and urged platforms to take legal action.
Amid growing concerns about the risk of misinformation from financial influencers, in June, SEBI's board approved a new rule that bans regulated entities, including stockbroking firms, from working with individuals who aren't registered with the regulator and provide investment advice on stocks and bonds.
SEBI adds that it is looking at ways to help people register as investment advisors, acknowledging that its tough requirements have led to limited take-up. Nonetheless, the new rule has been lauded by the Independent Advertising Standards Council of India, which last year issued its own guidelines requiring financial influencers to disclose their qualifications before giving advice.
I think this is a recognition of the fact that finfluencers are growing in popularity, that their opinions do matter to consumers, and the fact that I think all the regulators want to ensure that power of connection with consumers is not misused. Financial products are not necessarily very easy to understand, so there is also merit in financial influencers actually demystifying financial products.
For now, the new compliance rules aren't having a major impact on Tolkar, who says her focus is on giving broad financial advice. In any case, she says she is upfront about the fact that she is not a registered investment advisor and avoids giving explicit tips about which stocks to buy or sell, fearing that this will attract the regulator's attention. While the new rules could cut off some potential revenue streams, overall Tolkar welcomes the decision.
It's a necessity that, this rules and regulations are a must. I think SEBI has made a very commendable move.
For finfluencers who have built a thriving career online, the hope is that as regulators show more interest in the sector, this will only help to establish greater trust in those who do play by the rules. Rebecca Bundhun, CNA, Mumbai.